All right, let me ask you something. A lot of traders think they know exactly what their best setup is. But if I asked you to prove it to me right now with hard data, could you? Honestly, if you're not tracking the data, you aren't really trading. You're just kind of guessing. So, let's dive into exactly how you can pinpoint which specific trading setup is actually putting the most money in your pocket.
So, do you really know your best setup, or are you just relying on a gut feeling? Because here's a harsh reality that catches a lot of people totally off guard. You know that setup that makes your heart race? The one that feels incredibly exciting to execute? Yeah, well, it's usually not the one quietly making you the most consistent profit behind the scenes. To actually find your absolute best setup, you have to completely shift from guessing based on emotion to tracking the hard, cold data. This means logging every single trade by its specific setup name and brutally comparing the metrics. And look, the goal here isn't just to find that one setup that gave you a massive one-off winner. We want to find the setup that performs consistently day in and day out.
Here is the 6-step playbook we're going to use to definitively find your edge. We're going to name our setups, track every trade, compare the profit and loss, review the averages, check market conditions, and track execution mistakes. Let's get right into it.
Step 1. Name each setup clearly.
This right here is where most people fail. I mean, you literally cannot track what you haven't explicitly defined. Giving every setup a highly specific, concrete name is the foundation of this whole thing. Check out the contrast here. You need clear labels, right? Like breakout, pullback, or reversal. You absolutely have to avoid vague labels like good trade or just momentum. Clear setup names make your data infinitely easier to review, while vague labels, well, they're just going to ruin your insights entirely.
Moving on to step 2, track every single trade.
Look, every single time you click buy or sell, that trade has to be logged. You need its correct setup name, the exact risk you took, the market conditions at the time, and yep, even the emotion you were feeling. And crucially, listen to me on this. You can't just track your winners. Losing trades are just as important. Honestly, maybe even more so, because they clearly show you exactly what is bleeding your account dry. Ignoring losers is a fatal flaw. You are never going to find your true edge if you hide your mistakes from your own journal.
Step 3. Compare profit and loss by setup.
Okay, so this is where statistical reality hits you, separating that emotional confidence from what is actually happening to your capital. By looking at the total P&L for each specific strategy, you instantly see what makes the most overall and what loses the most. For example, a reversal setup might feel super fast, aggressive, and incredibly exciting, but the data here shows it's actually draining your account by $1,200. Meanwhile, your breakout setup, it might feel kind of boring and slow, but hey, it's quietly sitting at a positive $4,500. This step completely separates the setups that feel good from the ones that actually perform.
Step 4. Review win rate and average trade.
Now, P&L alone isn't enough, right? You really have to look under the hood and compare your win rate and averages. Take a look at how the average R multiple normalizes your profit based on your initial risk. If you risk $100 and make $250, that's a 2.5 R trade. A setup might actually have a lower overall win rate, but if its winners are massive, like this breakout sitting at 2.5 R, it can totally outperform a setup that wins all the time but has massive out-of-control losses. The best setup is almost always the one with the strongest balance of consistency and reward.
Step 5. Check market conditions. Context is literally everything here. A breakout might absolutely crush it in a high-volume trending market, but it will chop you to pieces in a tight range.
And finally, step 6, look at mistake frequency. I have seen this happen so many times. Your best looking setup on paper might be practically useless to you right now if it's just too hard to execute consistently in real time. You've got to track exactly how often you're chasing price, entering early out of FOMO, moving your stop losses, or exiting way too soon out of sheer anxiety. Oversizing positions is another huge one. If one setup causes you to repeatedly break your own rules, well, it might not actually be your best edge yet. A truly profitable setup has to be repeatable, and it has to be emotionally manageable.
Now let's talk about automating this whole process with TradeZella. Because doing all of this manually in a spreadsheet, absolute nightmare. That is exactly why TradeZella is such a game changer. It's packed with tools to replace manual data entry, like the Zella AI Auto Tagger, which automatically categorizes your trades based on rules you set up. You get custom setup playbooks to compare strategies side by side, tick-by-tick trade replay over 11 years of historical backtesting data, and this amazing analytics dashboard that visually pinpoints exactly where your edge actually lies. Honestly, one of its best features is trade replay.
You can replay any trade tick by tick using real 1-second price data. This lets you visually review why a setup worked or failed, completely removing hindsight bias. You get to see the chart exactly as it looked right when you entered the trade. It is the absolute best way to audit your real-time decision-making.
Real quick, let's go over some common tracking mistakes.
Before we wrap up, you absolutely need to avoid these rapid-fire pitfalls. These will completely ruin your data collection and keep you stuck in the guessing phase. Ready? Don't mix totally different setups under one vague label. Don't judge a setup after just 3 or 4 trades. You need a real sample size. Never, ever ignore your losing trades. Stop focusing on that one massive winner that skewed your P&L. And most importantly, do not change your setup rules before you've collected enough data. Changing the rules too early completely destroys the integrity of your sample size.
So what's the final verdict here?
Finding your ultimate, most profitable trading setup means tracking every single trade by its specific name and reviewing that data with brutal honesty. You have to look at the P&L, the win rate, the R multiples, the mistakes, and the market conditions. And please, keep this front and center. The best setup is not always the most exciting one. It's the one that performs consistently. Discipline and data-backed consistency, they will beat out excitement and gut feelings every single time.
If you are finally ready to stop guessing and start actually tracking your performance like a pro, you can grab 20% off TradeZella through my exclusive link today. Seriously, it's an investment that can pay for itself the moment it stops you from taking just one bad emotional trade.
I'm going to leave you with this final thought. Once you actually start tracking the hard data and stripping away all those emotional biases, which setup will the analytics reveal as your true moneymaker? Start tracking because the answer might completely surprise you. Thanks for watching, and I'll catch you in the next one.